Hello everyone, petar.jacimovic here from vicanalysis.com. I want to post an update on the yen currency pairs. I have the setups right now. It's going very good after the massive buying climax here, when Japan actually lowered interest rate by 10 base points. We got a massive reaction here, and that created very strong massive buying climax, volume spike on the futures market, also on the FX market. And this is basically what the professionals are waiting, and these opportunities don't happen every time, every day. So you need to watch carefully market and observe these kind of situations to benefit and to try to earn good money and to build good positions which can bring you the good risk reward ratio. What happened here again? After the lower interest rates from Bank of Japan, price went 300 pips on USD Japanese yen, but as you can see, price went here to the 121.40, and price went back all the way 222 pips, all the way to 119.12. So what is this? This is what I call the first news reaction and the panic reaction after. So this all is panic reaction because of the news. So during the news we went higher, then sellers started to, sellers from this stage, they want to cover their positions. Probably they have some selling positions earlier, so they don't want to let the buyers actually take control over the market. So buyers attack this strong on the news. There's a lot of orders, but when the buyers take profits, when sellers actually started to build positions on, and they got power to move all the way lower to 225 pips. Anyway, this is what the Viker call the automatic reaction. After the panic, after the news effect, we have an automatic reaction. After that, price went to test that area again, where we got that buying climax stopped around 121.40, and we saw the lack of demand there. Also, I did put the oscillator, the moving average oscillator, which showing us the clear divergence. Here we got a higher swing high, and we have here very as you can see, lower swing high. This is not even above the zero on the oscillator, so this is a big buyers tried actually their maximum to push this yen USD yen higher, but they really didn't have power. And you see how well sellers protected this area around the buying climax zone, and later on they started to sell. So I jumped here. I secured position today. I'm a 56 pips in plus. The risk was 40 pips in this setup, and my original target is about 1 to 3 ratio on this one. So I want to catch a 61.8 Fibonacci retracement. Probably price can go even lower, maybe even to 119.15, where we got the automatic swing low from automatic reaction. Maybe even to go all the way where the buying climax started, 118.55. But the point is, I want to scale out position. I want to grab the profits and wait the next opportunities on the market. So you don't need to wait and and think about price can go much lower or something like that. You just grab decent profit. Quality risk reward ratio 1.3 is very good risk reward ratio. 1.4, 1.5, of course. Even the 1.2 is good if you can grab. So again, you just scale out. You scale out. You grab the profit, and that's how you build account. So again, this is the panic reaction by crowd. Later on, professionals very clean selling here, and some of professionals. So this is a very good area where I entered around 121.15 area. Probably you could have a better price if you build around this stage here, but that's about 10 pips better price, so it's not big deal. This is a very good price where I established my positions. So again, strong divergence here, massive buying climax. We know that buying climax is it's like telephoning the professionals, bankers and money managers. Pay attention on this, because it can bring us a good opportunity, and this is how we trade. In professional world, we wait a strong liquidity, we wait something big to happen on the market, that we can where we have the very high possibilities, of course with the proper knowledge, to establish positions and then you know, earn good profit. So again, we are not interested to trade again in there is a lot of types of techniques, you know, but the key actually, you know, key principle is activity and liquidity. There is, you can ask any professional trader and you will get same answer. We need liquidity, we need something big to happen, we need big volume spikes, we need, you know, it doesn't matter if the volume, you know, we need something big, volume spikes, upward, downward, some good reactions there, and that we have a potential to establish very good quality positions. We don't like the market like this one, which is very going on the low volume and going on the very small range of the bars and stuff like that. You know, you don't like to trade that market because possibility to failure there is a very big, you know, because there is no liquidity. Market is actually absolutely wild at that stage, you know, there is no professional money there. But when there is a big liquidity, something big happen, there is a lot of attention by professionals, so that's also your chance to grab profit and ride with professionals and with banks together. So again, this is the FX market. This is volume spike, the buying climax. This is not centralized volume, this is a tick volume. This is, for example, I will go and put you here my this is the USD Japanese yen chart on futures market, and you see the massive reaction there, 33k, almost 34k. This is a big spike, the 50-minute bar. It's automatic rally, the secondary test, testing selling climax area, then establishing the trading range. This is pretty much how the accumulation looks like. We define some trading range there. There is a successful test on the this was the first. Yesterday we got a successful test, and today also this you see the successful test here. So very big supply here on this zone, and this is all how the professionals will potentially build upward to the automatic rally area, even though we can absorb totally in the next few days the massive climax. This is a yen USD again, so this is a buying climax on the USD yen, which I will transfer you now. So again, big volume spike on the futures market, strong divergence there, successful test, Richard Wyckoff trading range defined, very strong setup. Again, this is how you basically trade. So this is my again, never overextend risk. It doesn't matter how the setups looks like, you must keep risk under control. So basically I trade 0.5 risk from account. I am usually going 1-3 ratio when I see these opportunities, even to 1-4, 1-5. On the Euro Yen I took the 1-3 ratio, which I will show you, and I'm waiting 1-5, the second position. But usually my positions are around 0.5 risk per 1.5% from account. I'm risk pardon, 0.5 from balance, and I'm going usually for 1.5 return to 2.5 return. So this is the USDN setup. I'm awaiting again level of 119.75, where is my target and potential 1-3 ratio. If we go to the Euro Yen actually just after this buying climax successful test, I got my first target here in 1.5 return, risking the 0.5. So again, the same thing, there is a big volume spike again, even though this is about 270 pips, and I sold here. I took here, I sold with 2 positions with 0.5, and I took here 115. The risk was about, I think, about 30-35 pips in this setup, and I'm still in this setup because again I'm still expecting lower and stronger GBP Japanese yen, and I'm expecting this automatic rally swing low potentially, and there is a Fibonacci expansion 100% around there. So we'll see how we'll go. Both positions are secured. USD yen is secured, and Euro yen is secured. So we'll see what will happen, but I hope for the best. There is also Kuroda speech later on and stuff, you know, so we will see. Again, nice opportunity there, and I really expect, I already took 1.5, but I really expect Euro-Yen to hit my second target in 1.5 ratio. 1.5 ratio this stage here around 130. My take profit is 130.50 on the Euro Japanese Yen. So again, only the Japanese Yen got these massive reactions. There is no other pair, other currency except the Japanese Yen, which got a massive reaction because of that cut rate, unexpected, from Bank of Japan. And this is what you actually need to trade. You know, you don't want to trade pairs with there is no liquidity, there is not something big, because there is a big risk, you know, and pretty much every minute, every second there is a risk if you enter setup there and there is no massive reaction, there is no professional money involved, you know, in that percentage, like when you have something massive happen and which brings a lot of attention to banks and professionals. One interesting thing here also, I will go on other pairs just to see what expect. Australian dollar basically rejected from the major upward trend line, which now became a resistance. We saw the doji candle here, we saw that right now we got a good supply. Also prices, I did put this upward trend line, this one, so maybe if we break this upward trend line, we may go lower on the Australian US dollar. But again, Australian got a good business confidence in the country, employment is good, and you know, there is a lot of good indicators in the economy there. From the other side, commodities are not so well, the commodity index is not performing so good. Gold is holding higher, so it's pretty neutral on Australian dollar. And this is why, even though if you sell there and there is a sign, it can take a time, you know, it can take days and days to adjust the price to go 100 pips, you know, it can take days, because it's a very, you know, look at this, for example, from 20 January, so in a 10 days price went only 250 pips, you know. So even though if you trade this and you know you need to wait 10-15 days just for 250 pips because of the neutral fundamentals on the Australian dollar, there is no big action there on the Australian dollar. We saw today they kept the rates and so on, and we didn't have any reaction. Actually we got, but this is not something big, this is just 35 pips. So this is why trading this kind of pairs, even though it can go lower, but it can take very slow. It depends also on the commodities and a lot of next news releases and so on and so on. So it's a very big risk trading right now, these pairs. I want also to go on USD because I got the questions about this pair, what I expect. First of all, I'm pretty much neutral on the all currencies except the Japanese yen, which got a big reaction. That is one thing I want to tell you at the first place. But if I need to decide which and what we may expect according to this situation right now on the euro, I really expect higher prices and some correction higher from the short mid-term frames. I placed the ABC on the weekly time frame, this ABC, and we can see the 61.8 expansion is around 1.1285. This is also potential thing that price can go there, but again, just a second, I will put the expansion level here and show you that actually price can go to test again 1.1045, 1.145, and then 1.1250 area are the short-term resistance levels and potential take profits zone if you actually build buying positions. Why I'm expecting the higher USD, because this buying climax, it wasn't so strong on the even on the futures market. This wasn't so big buying climax according to the volume, which means is actually that there is a potential that this buying climax the massive wide spread is actually a sign of the strength, and it's actually it can be that actually we did this bar, we marked starting of some larger upward corrective phase according to the mid long-term perspective. So as you can see on the weekly time frame, this bar actually closed well above 3 weeks in a row. You see 3 weeks in a row, and bar closed above all 3 weeks. So this can be a very good sign of strength for the further upward movement on the USD. Even though we are in the quantitative easing program, fundamentally, so that's why I'm neutral. You have the quantitative easing program from one side, which is strongly bearish for the USD, but from the other side, you got a massive reaction from buyers. You saw that actually some of the professionals, some of the syndicates are actually building some buying positions here, and that we may see actually potential 100, 350, or even 700-800 pips higher price before we continue with potential downward movement on the short and mid-term perspective. So for sure I will not be seller on the USD, because again what we got previously is this massive selling climax and absorption after the, you see, 110 pips and cleanly successful test and price went higher. Then again sellers tried but with no success, and price still going higher. So again, be careful when selling. It's globally it's neutral. It's absolutely neutral. You can see that on the daily time frame. You have about 40 days of the sideways. So I'm neutral on this pair, but with the potential for the higher price and potential testing of, again, 1.145, 1.1250, and later on 1.1585, and so on and so on and so on. So that's it for this analysis. Again, if you want to learn professional way of trading, and which is most important, if you want to know and to understand the market and learn when is the best time to build positions on FX market, to learn intermarket relation, to learn fundamental analysis, which taking a big part in the professional trading. I absolutely advise you to finish my mentorship program, because it will literally open your eyes and you will think totally on a different way from the crowd, and you will understand the logic and to read the liquidity and activity, which is the key part in any financial market, not just FX market, also on the stock market, on any other futures market. If you know to read activity, if you know to read volume, you will be very successful. Just you need to practice on that field, and I'm here to help you. I can be your mentor, and also I can give you full support after my mentorship program, and we work together so you can progress faster and better. That's it for this analysis. If you like my analysis, feel free to subscribe my YouTube channel. Feel free to also to leave some comments, and follow my work on Forex Factory Trade, the art of trading by Petar Serbia. Also visit my website vikefanalysis.com. Cheers and happy trading.